What is going on, everybody? Paul here, coming at you with another Crypto Coffee update, which is where we talk about the news, the conferences, the events, just everything that you may want to see for the next few days in the huge and growing digital financial space known as crypto. Now, before we get into any of that, it is customary to join me in what's called a simultaneous sip, which is just a sip of tea, coffee, water, whatever you have on hand, really, just so we can start off the day right together. So, join me. Good stuff. All right. So we have Cryptide open in front of you. It is cryptide.cc for those of you who want to visit us, and it's a fantastic resource. Although I am a little biased, you can get up to date on all the Crypto Coffee updates here, and if you don't have time for that, after all, the videos are a bit longer nowadays, we have all of the news that we talk about and more in our news section. So if you're at work, it's a busy time, you got to go pick up the kids from daycare, get home, cook dinner, this is a great way just to get an idea as to what's going on and read the articles that interest you and fill your circle of competence. So really fantastic resource there. And in our blog section, you can see next week's crypto, which we have up for this coming week, which has all kinds of information about conferences. So if you want to see what's going on in your region of the world, and hey, perhaps even in your local area, this can empower you to get an idea as to what's happening before it happens and see whether or not it may be something worth attending personally. So cool stuff there. Cryptide.cc, check us out. With that said, let's go ahead and get into the meat of the matter for the day, which is a fantastic conversation that I had. It's about the Bitcoin node and hash distribution relative to mining pools, relative to China. So there's all kinds of stuff that we're going to be unpacking. But before we get into that, I just want to do a small PSA and just touch base on something that I've noticed in the crypto community that I think we're all guilty of at some point in time, definitely myself included, and that is how we share information. This gentleman who I had some dialogue with definitely was a bit more visceral than he could have been. Again, something I think we're all guilty of at some point in time. However, I just wanted to point it out because I've noticed it becoming more prevalent in the crypto community, not perhaps least because of the prolonged bear market. Individuals, after all, they want to have their positions validated, especially when the money's not coming in and the market certainly isn't validating the a long position at the top. But with that said, I kind of see human interactions like this a bit like, surprise, surprise, the decentralized topography of nodes that we see and that we're going to be talking about here momentarily. What I mean by that is when I try and communicate information or someone's trying to communicate information to me, it is as though we are propagating information across a social network, which in reality we are. So with that said, if an individual is being visceral or using ad hominem attacks, calling people dumbasses and that sort of thing, it makes that information appear potentially less valid in the eyes of the individual due to the mutual association between the individual who is disseminating the information and the information itself. Now, this has no impact on the objective validity of said information. However, it definitely can make the propagation of information and knowledge across the human social network as a whole much more difficult and take more time. So with that said, my resolve is to communicate as efficiently as possible and strive for objectivity as much as possible. And again, this is something we're all guilty of at some point in time. So with that said, that is my PSA. Let's go ahead and get into what's going on with this node distribution. Now, this conversation was about China and how 74%, which is a huge majority of mining power or hashing power, is coming out of Chinese mining pools. Now, this is an important distinction between mining pools and actual node distribution. Let's go ahead and look at where these nodes are. There's about 9,800 Bitcoin nodes around the world. And if you were to check these out and think, well, pound for pound, they're about the same, you'd think, wow, Europe really is the lion's share of these nodes, but the United States, you can see over here, has 24% of all nodes. With China coming in at just 4%, not a cause for worry. However, this is a bit of a misperception due to the fact that one node is not equal to one hash per se. Essentially, you have what's called hashing power, or the amount of power able to be input to validate the Bitcoin network using the proof of work mechanism. So with that said, while China only maintains 4.11%, or about 400 total Bitcoin nodes, Overall, many of these are mining pools, and some of these are what's called ASICs, or application specific integrated circuit farms, which are specifically designed and designated for mining Bitcoin specifically, or other SHA-256 algorithms. So all that essentially just means that while Europe and the United States may numerically have the lion's share of nodes, they do not have the majority or even the supermajority of hashing power between them. So China really is a very relevant piece of the puzzle. You can see here the hash rate distribution, which looks a lot different than the overall node distribution. You can see here BTC.com, Antpool, F2Pool. The top three of these, outside of unknown, are all based in China, which means that China has a soft power effect over these mining pools and the individuals who are pointing their machines to those pools to mine in a collective fashion. A mining pool is just a confederation of individuals who share their mining power and in turn proportionally share the block reward amongst themselves. Said another way, if I had hashing power and you had hashing power and we had the same amount, we can confederate this into a mining pool. Let's say we find a block, fantastic. We'll split it 50-50 because I have 50% and you have 50% of the hashing power. So you can see how these pools are both fantastic ways to allow smaller miners and individuals to work together to have a potentially larger share of the block reward, but in that same way can have a negative effect in terms of concentration, geographical concentration of hashing power. So with that said, this individual maintains the position that essentially due to this concentration of not only mining pool, but geographic hashing power in the nation of China, this can lead to some dubious effects, including a potential 51% attack against Bitcoin on the part of the Chinese state. Now, this is something that I believe is definitely a legitimate cause for concern and something that should be watched very hawkishly in the event of some kind of nefarious activity coming out of the Chinese state as a nefarious actor or entity against the Bitcoin network. However, I maintain the position that the overall viability of such an attack is actually less potentially viable than it appears on the surface, and I think that's something that I will potentially be able to corroborate, hopefully to the best of my ability, and if any individual has information that runs antithetical to that or runs concurrent with it and helps to validate it, let me know below in the comments, because this kind of thing really is kind of the meat of the matter and the fascinating components of a decentralized network. Well, relatively decentralized. Nothing is purely decentralized. So let's go ahead and unpack. This is one of the sources that was shared by the individual saying China has the power to destroy Bitcoin and it's already manipulating the network. Now, this latter point is true. However, again, I hold a bit of contention with this assertion that China maintains the power to do so. Again, I'm assuming that this means the Chinese Communist Party, as Xi Jinping is looking like a Death Star blasting the Bitcoin logo here. So I believe that's what they're inferring. However, the people of China and individual miners, even mining pools, are separate from the state. And that's kind of where the point of contention that I have lies. You can see hash power. This is coming from the article that is being referenced, the study coming out of Princeton, that at the time of writing, 74% of hash power on the Bitcoin network is in Chinese-managed mining pools. So again, a collective representation of individuals hooking up their machines to these pools. And pool miners cannot be directly controlled by China, but the managers are located within China and as such are subject to Chinese authorities. Because managers are responsible for assigning mining jobs and propagating completed blocks, they control the inputs and outputs of these miners, allowing Chinese authorities indirect control over that hash power. And I think this is an important operating phrase here, indirect control. This means, again, they have a soft power element in terms of how they're able to manipulate this hashing power. Unless the machines are physically located in the People's Republic of China, then there is a limited amount of control that can be exerted over this 74%. Now again, assumingly the majority of hashing power, physical machines, are indeed located in the the geographical region of the People's Republic of China. So with that said, you can see China has a more direct control over the hash power physically located in China, as we just said. This is a significant share of the global hash rate, more than is controlled by any other single country, but the precise quantity is unknown, and that to me is the big takeaway. Even if we were to be relatively generous and say, okay, maybe it's not 74%, maybe it's closer to 65%. Maybe 65% of total hashing power is physically located within China. Well, this raises some interesting questions about, again, the viability of such an attack. Before we get into that, this is the source that was cited. I went ahead and opened it up. It's the 2017 Global Cryptocurrency Benchmarking Study. This was a great one, the one from Princeton. Definitely definitely worth a read. This one is a bit longer, 112 pages. But it's from 2017, and it as well says that just two countries control 58% of mining pools with greater than 1% of total Bitcoin hash rate, being based in China, followed with the US at 16%. So it's a lion's share even in 2017, and it seems as though that these pools in the bear market are beginning to kind of coalesce and homogenize in varying ways. But again, this doesn't change the geographical distribution of the overall hashing power. So with that said, there's a threefold reason why I am remaining skeptical, yet of course very attentive to this issue, and still again skeptical that it is viable, again because it's indirect control. I have 3 points here. The first point is the declining comparative advantages of the Chinese state and economy due to the fact that not only is China's economy developing rapidly, their middle class is growing, and as such energy prices are becoming more competitive with more developed nations. Of course, it's kind of an apples and oranges comparison because China is still, again, developing, so their energy rates are far, far more preferable when compared to a Western developed nation. However, nations that are opening up like Myanmar / Burma, whichever you want to go with, nations like Laos, Vietnam, even Cambodia, you're beginning to see more favorable energy rates in those regions, maybe even in Indonesia, which means potentially you can begin to see an offloading of this mining equipment to areas that have a more preferable energy pricing kind of strategy. With that said, China does have some subsidies on its energy, so it may be part of a longer term strategy, but I maintain the position that as the Chinese economy begins to develop further, it means that comparative advantage is going to be inevitably lost, which means that if China wants to undertake such an attack, they better do it quickly. And that says nothing about the information propagation across the network. Again, we humans are social creatures and we have social networks. So with that said, if the Chinese state was indeed undertaking such a strategy, it would be very difficult, assumingly, for information not to leak out to the wider world. After all, individuals who are not based geographically in China, who are utilizing Chinese mining pools, would assumingly not want to be involved with a state actor using it for nefarious activities, which means that assumingly and hypothetically, you would see a decrease in overall share of Chinese mining pools relative to the total hash rate on the network. So this would be, again, hypothetically, the reaction by the wider community. Since economic self-interest does indeed reign, miners are indeed some of the most economically self-interested individuals when pertaining to the Bitcoin network, so the reaction would assumingly be swift and fierce. And again, even if this means that China still maintains the geographical majority of the hash rate, this still raises the question of how such an attack would be undertaken. After all, in my opinion and in my 2 cents, kind of looking at it from a state actor standpoint the best I can, after all, it's one individual, the taxes and the ability to control this hash rate I would assume it would be utilized more as a trump card than anything. After all, if China does control, in its borders, the majority of Bitcoin hashing capacity, then it can make a lot more capital taxing and regulating said activity very stringently and ardently, making sure that these machines can't leave the country and they're utilized for specific purposes, rather than pointing these miners at the Bitcoin network and destroying it outright. Again, China is huge on social harmony, so the notion that they would destroy a competing asset that has huge amounts of economic investment within its own borders that they can have taxable revenue off of in order to ensure that the yuan remains the predominant means of exchange just seems unlikely, especially because during the Chinese Bitcoin ban not for mining, but ban as a medium of exchange, we've seen huge craterings in the numbers of Chinese Bitcoin users using it as basically currency or using it even as a store of value. It's very tenuous. So with that said, it seems that the edict of the state itself is enough to stave off Bitcoin as a legitimate mechanism of competition to the Chinese yuan, so destroying it may actually be not within the Chinese state's economic best interests. Again, this does not mean that such an attack is not possible. However, it means that the viability of such an attack is called into question, perhaps to such the extent that while, again, this person raised some great points, absolutely worth keeping an eye on, perhaps very stringently, it nonetheless means that the actuality of this kind of scenario is, as I see it, very low. So with that said, I'm really curious what you guys think. Let me know below in the comments or over on Discord. This kind of thing is fascinating. Again, this in particular is fascinating. The fact that 4% of nodes are located in China, but they maintain the vast majority of hashing power due to the amount of pools, Chinese mining pools that exist. I'm really interested to see perhaps the total amount of hashing power not geographically located in China that is using a Chinese pool, because that would give us a really good idea as to whether or not this attack truly is viable. Because if these miners that are not physically located in China decide to pool their support from a Chinese pool, then the viability of such an attack drops to zero if the Chinese hash rate drops below 51%. So we're really kind of in a gray area. Again, the Princeton study itself says that there's really difficult to ascertain this data, and if Princeton can't find it, we may have a hard time. But I know you guys are hungry for information, so if you have the info and anyone has the calculations that could be undertaken for such a figure, that would be awesome. So with that said, just a few articles to help to also demonstrate that the Chinese social order is indeed tenuous to a degree due to the domestic economy slowing down. Again, I don't think this means that China is going to go kaput and just explode, but nonetheless, it definitely demonstrates that China has other economic factors on its mind and really needs all the capital it can get. So the taxation argument may hold a lot more water than some of the other ones, potentially. China easing expected to inject up to $625 billion into the economy. This is January 2nd. And of course, 50 million urban homes are still empty, with the average Chinese portfolio maintaining roughly 75% exposure to real estate, which we talked about on another Crypto Coffee update. It's tenuous. So such an approach may cause more social disorder than harmony, and that's really not what China's all about. So, like I said, let me know what you think of this below in the comments. With that said, we also have some interesting stuff going on. The United Arab Emirates and Saudi Arabia, Emiratis? I think it's Emiratis. Either way, UAE, as they're so lovingly called, and Saudi Arabia partnering up to make a potential new cryptocurrency. Now, if you recall, the UAE, or Dubai more specifically, partnered up with PundiX, which deals with a point-of-sale crypto hub, essentially, allowing individuals to swipe a card and pay using their crypto, which is freaking awesome. So with that said, if that indeed keeps going in that direction, if Dubai and PundiX begin working together, as was stated, then there's no issue with that partnership. It's able to be rolled out fluidly. This could bode very well for the crypto ecosystem as a whole. After all, I like to think of individuals who are between 50 years old and 70 years old. Credit cards and debit cards are still relatively new. I say relative because, for someone my age, for instance, I can't remember really a time when credit and debit cards weren't relatively prolific, pretty much everywhere by the time I started using them. However, these older individuals grew up with checks or cash. That's pretty much your only option. Or maybe a wire transfer. Not sure if those were around back then, but suffice to say, these cards are relatively new. So bridging the gap between the new and the old is huge for adoption, and the fact that it seems as though the UAE and now Saudi Arabia as well will be looking towards kind of bridging that gap in a more physical way, that could be very, very beneficial. Again, it was just last year that Stellar Lumens was labeled the first Sharia compliant crypto, so this is a relatively untapped region. Not too much information on the specifics of the partnership, just some dates here and talking about the fact that it's happening, a few quotes here and there, so really interesting stuff there, more of an experimental phase than anything. So yeah, really interesting there. Similar region, slightly different. Turkey is having some issues with System Coin, some hilarious spelling there, System Coin. They have some disturbing security flaws, some issues with allowing user information to be demonstrated through support tickets, highlighting that they didn't follow basic security protocol, and users are veritably having problems making withdrawals. That to me is the big thing that sticks out. They can't withdraw their funds. We've stated before on this channel that if you do not control the private keys, you de facto do not control the crypto. Sure, in the Mt. Gox case, you de jure own the crypto and you will get your Bitcoin back in 5 years or so. However, you don't de facto, which means in actuality have the ability in the moment to withdraw those funds, move them around as seeing fit. You're really trusting a third party to basically trade a digital asset for another on your behalf for a small fee, using technology that is secure, and then give it back to you for you to withdraw. So there is a level of risk that you're usurping when interacting with these kind of centralized systems. With that said, not financial advice, just my 2 cents. I think hardware wallets are fantastic. Yes, there are some security vulnerabilities if you're getting it from a third party, but as long as you're doing your own research and checking up behind that kind of thing, ultimately seems to be the most secure way. So really just Paul's 2 cents there. And another interesting observation, this is something that, not trying to insinuate anything here, But seeing a volume of $67 million or $68 million, while potentially legitimate over the last 24 hours, this is something I like to think of when I think of Sylvian Ribes. He came out with that great statistical analysis validating varying volume in crypto exchanges, and how a lot of this volume is indeed simply wash trading in order to attract individuals to a particular exchange because, well, it looks like it has more volume, which means it's a competitive entity. And so with that said, it's a shame that this is even called into question, where potentially a legitimate exchange experiencing technical difficulties and issues. It very well may be that this volume is contrived. But again, we have no data to back that up, no empirical analysis of System Coin specifically. However, with that said, the fact that this needs to be called into question is indeed it's demonstrative of the desperate need for some kinds of services and validation, which we're seeing more and more of nowadays. So I'm really excited about that. I think some fantastic stuff is going to come out of the pipe this year, and we're going to see a lot of stuff called into question, but in turn validated, which means that the space is growing as a whole, and I find that particularly exciting. So, last article of the day: Wyoming are looking to essentially see Bitcoin as money to a degree. I think the article is a little clickbaity to a degree, but yeah, it's crypto, and it seems to be legit. They want to see Bitcoin as money because Wyoming just pushed a bill through their Senate that seems to view digital assets as semi-exempt, if I understand it correctly. Caitlin Long has a great breakdown as to exactly how Wyoming is viewing cryptocurrency, and it seems to run relatively concurrent with Ohio with a bit more of a twist. Wyoming seems to want to open up the state as a kind of regulatory sandbox, which is a term that just means that certain rules and regulations that otherwise would govern various economic or financial activity are no longer applicable, but nonetheless are monitored, which allows individual companies and institutions alike to kind of experiment, hence the term regulatory sandbox. So with that said, Wyoming is a beautiful, beautiful state, least populous state in the entire U.S. So with that said, if they have all this nice tourism, Yellowstone National Park, and they're trying to make themselves a regulatory financial sandbox for digital assets, that could put them in a really nice position. Users may remember a previous Crypto Coffee update where we discussed Ohio, who, as well as viewing this kind of, they're beginning to view these kind of digital assets as much more legitimate, as they are allowing businesses to pay their taxes with cryptocurrency. This may eventually be expanded to individuals, but they are just kind of toying around with it now to get an idea, and Overstock said, well, we'll go ahead and do it. So you have a major company with a major state that is beginning to pay taxes in crypto, and Wyoming is not sitting idle while this is happening. This is a fantastic feature of the federal system of the United States, which means that individual states are able to kind of experiment and toy around with various approaches, sometimes very different approaches relative to one another, while the federal government sits back, observes, and gets an idea as to what may potentially be the best in practice approach for these new and exciting digital assets. After all, let somebody else kind of do the experimenting before you enact it on a huge government that's going to affect 310 plus million people. So either way, really interesting stuff there, and that's all we have for the day. Let me know what you think of this kind of content below in the comments or over on the Discord. After all, always love your input. You guys have some fantastic insights, and it's always a pleasure to speak with you guys. So with that said, thanks so much for watching. My name is Paul. We are Cryptide, and remember, the tide is rising, as is my coffee cup. Cheers, guys.